Hey everybody, my name's Allison Ostrander. I am the Director of Risk Tolerance here at Simpler Trading. And in this video, I want to talk about what I am looking at on DKS. So on this setup here, we can see that overall, this has done a pretty good job compared to a lot of symbols of trying to maintain itself above its 100-period simple. But as it's done that, we have certainly started to see some consolidation within the underlying price. Notice the Bollinger Bands flattening out, the 10 and 30 period simple converging together. We have the momentum hugging the zero line. When we zoom in here and can barely see the bars, that's usually a sign of consolidation. We have technically had valid signals on the compound breakout tool. A pullback signal here as we went down towards the lows around 100. We had a bullish signal as we tried to bounce back up, a bearish one to bring us back down. But you can see they've only lasted for like a bar or two, and then they immediately flip back the other direction. So when it starts to get very choppy like that, it's usually an overall sign of consolidation as well. Now, I would argue the top and bottom of this range that we've been in since August is probably 120 for resistance and down around 100 as support. But more recently, we've been in a bit more narrow of a range between 115, right, slightly below that being the top end of the range, and slightly above 105 being the bottom, with us basically hanging out around 110. So if you think that this could continue to stay in consolidation for the rest of the week as it continues to build energy into this squeeze, then this might be a trade idea to consider. It's the 110 iron fly, but instead of going all the way out to 100 and 120, which would be ideal, you can see that the credit that you would receive is not that much difference, 470 versus a credit of 440, right? 30-cent difference. But the risk is greatly reduced. Notice it's a 360 risk versus a 530 risk. So you're shaving about 30 cents of profit potential off for about $1.70 of risk, right? So to me, that makes sense. I don't mind losing 30 cents of profit potential if I can reduce my risk down to 360. And also, more importantly, have my profit potential now exceed my risk, where it's a 440 max profit versus a 360 risk. The reason why I also like these strikes specifically is you notice the premiums around 440 versus the pin. Well, as I mentioned, to the top side, the top end of this range has been around really 114.31, right? But just shy of 115. And the bottom of this range recently has been around 105.90, close to 106, but above that 105 level. So the idea is the premium that we're getting here is kind of within the top or bottom of the range that we've at least seen more recently, the more narrow range. So the idea is if we just continue to chop this week and stay within that range, even if you hold the trade into the close of the week, you don't maybe take a profit early off the theta decay. If we happen to close right at the top or right at the bottom of this range, it should put us around break even, maybe a very small loss, but obviously not necessarily that max loss potential that we would see if we moved outside our strike level. So that's why I liked this trade, because the premium was in line with the levels that I was looking at for the most part. It kept the profit potential higher than the risk, and then still played off the idea of consolidation. Now, the caution about this trade, y'all, is if the squeeze starts to fire. If the squeeze starts to fire up or down, that's when you could start to move into the max loss if we start to break above 118 or below 102. So ideally, we really want it to stay within the 115, 105 range, certainly not to start to exceed either of those levels. And so some things to be mindful of and watch out for if that looks like it's going to start happening is the Bollinger Bands is what I'd specifically be keeping an eye on, as well as if the momentum really starts to build up one way or another, either strongly above the zero line or it really starts to work its way back down. If you get that, especially if it matches with the Bollinger Band starting to open to the downside or to the upside, that could be your clue that the squeeze is getting ready to go directionally. So as long as you see this chop continue to remain there, right, and we still continue to trade within this range, then theta decay should work in your favor this week and maybe allow for a low stress rate trade to be able to take off. Thank you so much for joining me on this video. I hope you'll have a great rest of your trading day. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next time. Bye, guys. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.